Hey, it's Mark, and today we are going to talk about how to use outcome-based pricing and AI to build a seven-figure firm. And this is going to be the same process that you're going to learn today that we use to help other firms, such as Cohesion Advisors, go from zero to $120,000 per month. It's the same process that we use to take Sadowski and Company CPAs, closing $1 million in new clients using the exact same method that you are going to learn today. So a quick little agenda for you. We're going to talk about pricing outcomes, not services. And by the end of this video, you're going to be really tuned in on exactly what this means. So we're going to talk about outcomes, not hours mindset. We're going to talk about the number one pricing mistake that most firms make. We're going to cover strategies to command premium pricing. And then lastly, we're going to talk about going beyond outcomes, okay? Just to give you a quick little overview of who I am, and let me just kind of minimize this a little bit here. So just kind of starting in reverse order, I started my career at Gartner many moons ago and as a management consultant. I started my own advisory practice for over 10 years. And more recently, I am the co-founder of BizPayo. If you haven't heard of BizPayo, we're a payments application for accountants, and currently we process over $150 million in payments across the U.S. for accountants, okay? And most recently, I am the founder of TaxPlow, and TaxPlow is a platform that helps accountants deliver value and outcomes for clients while pricing at a premium level. Okay, well, I make a lot of these videos, I share a lot of education, and the point of this video is by the end of it, you're going to learn how to do this regardless if you decide to join TaxPlow as a member or not. By the end of this video, you'll have a lot of the fundamentals to do this yourself, okay? And you can start this right away. So bottom line, I help accountants earn more by transitioning from hours to outcomes, and I'm going to go through a lot of these methods today with you. Okay, so let's start with, I like to actually start with Warren Buffett, and he says price is what you pay, value is what you get. And I'd probably add to that, outcomes is what you deliver, okay? Or outcomes are what you deliver, all right? And I think this is fundamental because when you start to price outcomes and not hours, something changes in the relationship that you have with your clients. They see you as a non-commodity, and they see you as someone that goes beyond delivering that value, but actually associating you with value and associating you with actual outcomes on top of that value, okay? And I'm going to go into exactly what this means. So let's talk about the mindset really quick. So accountants like to give free advice, been there, done that. It feels good to give free advice, and just like I'm doing now, giving out a lot of free education, it's great, in some karmic way, hopefully it comes back to you. But unfortunately in our industry, a lot of times the client doesn't actually act on it, okay? And think about it, you spend hours or days, creating that perfect strategy and only to basically have them do nothing with it, right? Maybe you took days putting together a fancy tax saving strategy, right? Or maybe you really, dug into their financials and figured out a few things that they can do to strategically move the needle, but they don't act on it, right? So sometimes there's no skin in the game on the client's part, but for whatever reason, we have to get out of the mindset of giving free advice, particularly when a client does not act upon it, okay? And the clients are not paying for the 10 minutes of advice that saved them $100,000. They're paying for your 10 years of experience that it took you to get to that concise 10 minutes of exactly actionable information that they need to do, okay? So you have to kind of think about it in terms of how long it took you to get there. That's what they're paying for, okay? So even if we're talking about sort of like pricing on an hourly basis, right? Well, would you charge someone $400 for 10 minutes? Well, if it saves them $1 million, is that worth it, right? So we're going to kind of talk about going down that mindset and how you can really apply it to your firm. And this is what led me to take action to do something about this. So I noticed that many of us have a really hard time articulating outcomes. So the point of this is I want to dig into exactly what that means and how we can better articulate those outcomes. So I was in that same place, right? So me years ago, I did a quote unquote good job communicating how professional my services are, how great my team is, how many years we've been in business, yada, 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 right? Everyone says that these days, right? What accountant is going to say we don't provide exceptional service? We don't provide quality output for your money, right? If you are in a situation where you have to, explain yourself in a lot of these commodity types of ways, you're really doing it wrong. So, and this is me, right? So I didn't have a crystal clear method for really showing value, nor a simple method for tying my fee to outcomes, not hours. And over the years, it typically took hours to prove outcomes in terms of money saved working with me versus the next guy, right? So why should a prospect or client work with me versus the guy down the street, right? What makes me so special, right? Most folks, when they're as a prospect, they don't know you from Adam and Eve, right? So how are you going to quickly get their attention, understand that you are a force that delivers value and you deliver outcome, and you're really different from the rest of these accountants that are not doing this, right? Okay, so let's dive in a little more. So now, I tried and failed many times to find an easier way to justify my fees, right? I tried it all. You're probably here now, or you've been there, right? Hourly billing, fixed price, value-based billing, tiered billing, menu pricing, subscription pricing. Believe me, I've tried a lot of these things, and but I still really found it hard justifying my fee versus the guy down the block, and I was too easy to compare to the next professional. How many accountants do we see? And this may be you. Don't take it personally, right? You have a website. You have your little bronze, silver, gold on your website. Hey, starting at $400 a month per bookkeeping, $800 for this, $1,200 for that, right? You don't want to make it easy for people to compare you, right? And I understand that it's like minimum $400 or minimum $800, right, to kind of get folks in the door. But you don't want to be compared with other accountants because, believe me, in 2024, that's what businesses are doing, right? And you don't want to be in a position to be compared to the next person, right? So anyway, I realized my clients' eyes glaze over when I discuss numbers, KPIs, metrics, right? And this is stuff that we love to talk about, right? I mean, I can be in an Excel or Google Sheet all day, and in fact, I still am. But at the end of the day, a lot of clients don't care about these kind of numbers or these KPIs, right? What is MRR? LTV, CAC. Like, solid businesses do understand these numbers and they really care about it, but some just want you to not talk about it in a very dry way. They want to be able to get it instantly, right? Because a lot of the more successful businesses value time and over money to some extent, okay? So your job is to be able to communicate clearly as possible and in a way that they can retain it and that they can actually use it to not only level up their firm but get better, right? So I was there, but in a word, I was kind of boring, right? Because I was just talking about all these numbers and, their eyes are glazing over. So I appeared as just another option out of hundreds, right? And bottom line, I was a commodity. So I lost potential clients because others were simply cheaper. And so I did what any self-respecting professional would do. I got pissed, okay? But then I did something about it because I was just trying to figure out why am I losing these deals? Why am I giving away my time for free? Why am I doing this? Why are these other accountants so successful and I'm not? So, like I said, you may have been there, done that. So this led me to 3 epiphanies. Number 1, clients respond better to visual storytelling. Number 2, when you ask the right questions, it's easier to present these solutions as outcomes. And clients care much more about outcomes than a fancy website, my years of experience, my fancy certifications, my world-class customer service, price, and many of the things that I thought was important but wasn't in actuality as important as I thought. And I built manual systems to solve these problems over the years, right? I had a lot of stuff cobbled together on pricing, on how to allocate resources, fees, cost plus pricing models, and things like that. But I only recently with the rise of AI and machine learning was I able to finally figure out an approach that automates most of this, okay? Now, I'm not going to go into the deep dive details of how I actually did these things soup to nuts. I cover that in some of my other videos. But I want to kind of give you the 50,000 foot overview. And so this is a system where I basically created a system where I can generate possible outcomes based on specific scenarios and for all types of services, including tax planning, outsourced CFO, FP&A, bookkeeping, etc. And I went to work building software, and it's called TaxPlow, that could actually help accountants ask the right questions and present outcomes. Now, although I built TaxPlow to solve these problems, in this video, I'm actually going to go and show you how you can do it yourself without using TaxPlow, just like I did originally. So if you don't take anything else from this video, if you don't take any action afterwards, if you follow some of the principles in this video, you can totally do a lot of this yourself. And if you need a little help, we're always here to help. And as much as I'd love for you to be a TaxPlow customer and save months trying to figure this out on your own, in this video you're going to learn everything I did. And if you decide you need a bit more help afterwards, like I said, you can give TaxPlow a shot. So, how do I price my services? So let's dig in. And I love this quote from Seth Godin. He says, "The reason it seems that price is all your customers care about is that you haven't given them anything else to care about." Okay? So now there are almost a dozen pricing strategies for accounting firms, right? And it really largely comes down to positioning and outcomes. Your firm is defined by the customers it does not have and the services that services it does not perform, okay? So a lot of times it's easier to define yourself by what you don't do or what you are not versus what you are, okay? So outcomes don't just signify completion, they reflect your value, impact, and significance, and they are the currency of the business world. But value isn't measured in effort or intention. It's measured by tangible, impactful economic outcomes. And the more value you generate, the more invaluable you become, okay? Another favorite quote of mine from Henry David Thoreau, it says, "It's not enough to be busy, so are the ants." The question is, what are we busy about, okay? So, if you go through an entire day, you have no idea how you move the needle, that's something that you need to reassess, right? Whether that's a to-do list. I start every day with a to-do list, with an agenda, and typically if it's not on that, I don't do it, right? We have to understand the difference between priorities, importance, and urgency, right? Okay, so the number one price mistake, believing that effort equals outcomes, okay? And let me just start with a quote really quick by Deng Xiaoping. He says it doesn't matter whether the cat is black or white as long as it catches mice. And I would actually add, it doesn't even matter that a cat is involved at all, right? As long as you get the result, right? So let's dig into this, right? So it's not about you, it's about them. And it's actually not really even about them. It's about what you did for them lately, all right? Many accountants think, I did a good job. I slightly improved something. I did my best. I worked hard. I did my job. That's great if you work at the DMV, but that's not what people who create massive value get paid to do. Those people get paid to own an outcome, all right? And customers don't buy from people they like. They buy from professionals they trust. And a professional is someone who is responsible for achieving a result rather than performing a task, all right? So now, when you need a critical job done, who do you seek out? A nice person who tries hard or someone who has a reputation for getting done what you need done. All right? And that just kind of reminds me of the Ghostbusters, right? It's like they're there to do a job. You know, they're professionals. You can tell that they are all about delivering results, okay? Harsh truth number 1, effort does not equal outcome, okay? So believing that effort equals outcome is a big mistake. So you do not get paid for your effort. You do not get paid for doing your best. You do not get paid for doing a good job. You get paid for outcomes. And I know I might get a lot of pushback on this because someone would say, well, hey, we do hourly billing and we literally get paid by the hour, whether we do a good job or not. And that's mostly true, right? But at the end of the day, do you want a reputation for just, racking up these billable hours while not delivering value? It's great if you're racking up the hours and delivering value and outcomes, but at the end of that cycle, at the end of that year, or at the end of that contract, right, you're going to be reevaluated. And sure, it's so easy to say, okay, I used to charge $100 an hour, now I'm charging $150 an hour. But why? Okay? So again, the better you are at showing tangible outcomes for your services, the more you can command that premium fee. Okay? So it's not about trying to just randomly increase your fee with, the rates of inflation or cost of living, or saying, oh, well, this year, we typically raise our fees, 5%, right? Clients are going to start to look elsewhere as if you're not delivering value. If you're consistently delivering value, they won't, okay? So you get paid for outcomes. Harsh truth number 2, your perception does not equal your client's perception, okay? So no one cares if you think you did a good job. They care about the outcome they purchase from you, all right? And there's a critical difference between effort and outcomes. One of my favorite scenes from the movie Whiplash, if you haven't seen that, totally recommend it. There are no 2 words in the English language more harmful than good job, okay? And that is the absolute truth. People say, oh, what a good job you did, right? If you are an accountant and you're doing a good job, what does it take to get you to an exceptional job, to a job that is just beyond expectations, okay? So I want to talk about the FTE formula. F stands for financial outcome, T stands for time-based outcome, E stands for emotional outcome, okay? So it basically works like this. If there is any chance that the client can perceive any service that you offer as a commodity, it is your position, it is your job to position that service as an outcome, okay? And this is most effective if you can position as either one of those, right? So that financial, that time-based, or that emotional outcome, FTE, okay? Not to be confused by full-time equivalent, but, in the accounting world, that's something that it's also a acronym for that as well. But so this is the FTE formula, right? So now let's just talk about some ways that you can actually put this into tangible value, okay? So on the left, we have, here are some problems that typically clients come to us to solve. In the middle is the solution, what we typically say we're going to do to solve those problems. But what I want you to do is stop really talking about the solution. I want you to talk about in terms of desired outcome. Let's go through a few examples. Okay, problem. I need someone to do my books. All right, well, you say, well, yeah, we do that. We reconcile your books. We'll do that catch-up bookkeeping. We code transactions, right? And this is probably something that is on your website, right? Well, how can you change that, right? So instead of saying that, say, well, accurate books can lead to better credit terms with vendors, enhancing cash flow and peace of mind. All right. So there is a financial outcome in there, and there is an emotional outcome, right? Better credit terms with vendors, financial, enhancing cash flow, financial, and peace of mind, emotional, right? So as we go through this little exercise here, you see how I'm trying to weave FTE in as much as possible. In some cases, you'll see we actually have a triple play. We're actually having FT and E in one sentence, right? The more you can weave these in, the more you're talking in terms of outcomes and value and not just the services you provide, okay? Another one, Automated categorization speeds up the accounting process and ensures consistency, enabling quicker access to financial insights. Okay, so when you're having conversations, with a client, maybe you're renewing them, or you're having a conversation with a prospect, believe me, they've been through 5 other accountant interviews already, right? And they're all saying we're reconciling your books, we're catching up your bookkeeping, we provide these services, we do tax. They're all saying that, right? How do you stand out from the crowd, right? So let's just use another example. Problem here. I need help getting a business loan. Okay, well, you say, well, hey, we have financial statement preparation. We do review, audit, attestation as well if you need that. Well, how about we provide assured compliance with regulatory standards, reducing risk of financial discrepancies and potential penalties, okay? And that's a very emotional part, right? Because you are basically keeping them out of jail if their records are incorrect, right? Well, not fraudulent, but just, incorrect, right? So that's a big pain point, okay? Paying my bills, right? Well, hey, I need some help paying my bills. Well, we pay invoices for clients. We do that, accounts payable. Or efficient invoice management avoids late fees and can potentially leverage early payment discounts, okay? So that's a financial outcome, right? Avoiding those late fees. Another one, having trouble making payroll. We do payroll advisory. We process, processing client payroll. Or timely and accurate payroll processing ensures employee satisfaction and trust. Okay, so that is a emotional outcome, and that is a time-based outcome as well. Okay, so another one: file my taxes, tax prep, tax planning, entity selection and advisory, tax reduction strategies. Well, we provide peace of mind during tax season with the assurance that filings are accurate and optimized. Emotional. Strategic tax maneuvers to legally maximize post-tax income, ensuring more funds for reinvestment or personal use. Financial. Okay. Another one. Should I start a solo 401k or IRA? Okay. Well, yeah, we do retirement planning. Or we provide peace of mind for the future, ensuring maximum growth of your nest egg. Okay? Emotional and financial. Need help reducing costs. Need to know if I can afford 2 more salespeople this year. Okay? You can say, well, hey, yeah, we provide financial analysis and forecasting, standardized financial reporting, financial statements, develop industry-specific KPIs. Okay, yeah, that's nice. How about, and let me just kind of reduce me a little bit here so you can kind of see this. Actionable insights derived from financial trends, guiding business strategy and instilling confidence in future endeavors, financial and emotional. Reliable, standardized reports instill confidence during stakeholder presentations and financial discussions, emotional, okay? And you can see the rest of these. And by the way, feel free to steal these from me. And I've collected some of these over the years. I put together some of these myself. I can't claim that I've, basically developed everything and all these words myself. But it's a different way of communicating value and outcome, okay? So feel free to take this. You might want to update some of your materials. But I've found over the years that this is very effective language. And this is just a tip of the iceberg on how to really dig in with outcomes. What we're doing over at TaxPower is we're trying to automate a lot of this, right? Giving you the language to use, giving you the questions to ask, showing how you can deliver tangible, objective outcomes for your clients. Okay, let's keep going. All right, this is good. So now we're going to get into a really juicy part. We're going to talk about pricing. So many eons ago, there was what's called pricing 1.0. And this still exists today, right? We still use it to some degree, right? And it kind of starts with different. So pricing 1.0 is basically cost plus pricing. It is competition-based pricing. It is flat fee pricing. It is hourly pricing, right? And I'm not saying these are wrong. There's a time and place for everything. But what I developed with the pricing progression pyramid is how can we actually get to the apex of this pyramid to move our way up the pyramid to provide more value. Basically, the higher on the pyramid, the more outcomes and value you're providing, right? This is all about you. This is all about how much are we charging internally, right? Our flat fee pricing, right? Our cost plus, right? This is you. Clients want to hear about them, okay? So we go from the bottom of you getting all the way up to the top to them. That's what they want to hear about. They don't care about you or your, they care, hopefully they care a little, but at the end of the day, you have to lead with them. All right. So let's dive in. Right. So cost plus pricing, you take what it you take what it costs to offer your services and add a percentage to that amount to determine how much you could charge clients or should charge clients in order to make a profit. Okay. Pretty simple, right? If it costs you $50 in labor, maybe you tack on $20 to that, and that's what you charge. All right. Flat fee pricing, fees remain constant no matter how much time and resources you devote to a project. That can be a little risky, particularly if it's that fixed scope project, if you go out of scope. Very effective when leveraging price anchoring technologies, okay? So this is like if you're doing like a, kind of like if you're trying to, price anchoring is when you're saying, oh, well, we start at, so one of our prices is $900 a month. And they're like, oh, wow, that's expensive. And then you show them, okay, well, this is our $600 package, right? So you anchor around that high price, and then the way they see a lower one, that kind of draws the attention from that. Okay. So now, competition-based pricing. This is comparing your offering to that of competitors, right? And we can easily go to different websites and see what other folks are charging, right? TaxPile, we build that in automatically. We literally have a national database of what accountants are charging across the country based off of dozens of different criteria. I won't get into that too much. Like I said, that's what we've spent years building TaxPile for. Hourly pricing, billing clients requires firms to track every hour spent on a project. Then you present a list of services performed along with the hourly rate for your client. Okay, that's pretty simple. And like I said, hourly pricing isn't bad per se. It's just a matter of how can you tie those hourly rates to the value they're getting, right? And how can that be clear to them? Okay, shall we move our way up the pyramid? Let's go to pricing 2.0. And this is really what's called value-based pricing. And value-based pricing is when you price your services based on what your clients are willing to pay or the value they perceive in your service, right? So this is a lot better. We're moving our way up. And it's often tiered or menu-based pricing mechanism that is employed, right? So you may have that now. Maybe your bronze, your silver, your gold plan, right? Pros and cons to that, right? So the advantage is it can improve client loyalty and sentiment if used effectively, and it helps prioritize clients. And it's very effective when leveraging those price anchoring techniques, as I mentioned earlier, right? Bronze, silver, gold, and you kind of anchor prices to show them, hey, this might be high, but this might be more suitable for you, right? It's nothing wrong with a bronze, silver, gold model, but that in actuality, if you're doing that on a day-to-day basis, I'll just kind of give you an example, right? If you've done it yourself or you go to other websites, it's usually like bronze, silver, gold, like prices starting at $400, prices starting at $600 a month, prices starting at, right? So at the end of the day, when you get on the phone with them, you're going to have to model it out. You're going to have to price it out. You're like, okay, well, they're going to say, well, I thought you had a bronze plan starting at $400 a month. Why is it $700 a month? Well, because you have this, and this, right? So some clients can kind of see that as like a nickel and diming. And like I said, pros and cons to this, right? But, and that's why we've developed a better way where you can show consistent price based off of the services you're providing, and they actually clearly understand exactly what they're getting and why they're paying what they're paying, okay? So disadvantages, it requires you to have a deeper discovery call or consultative approach to sales, right? Because how are you going to figure out exactly what to charge based on these services, right? And it can be more complex to implement and maintain. Okay, so that's pricing 2.0. Let's move on up the ladder, the pyramid. Productized pricing, okay? And you may also, this might, so there's a few things in here, okay? So basically, we're moving up the pyramid. We're on pricing 3.0. So productized pricing, this is a combination of value pricing and creating products out of services that require less work to fulfill and can operate passively, okay? So this results in the highest profit margins since it includes build once, sell twice products, such as courses, communities, apps, and platforms. And then it kind of gets you into subscription services as well, right? And I'll go through a couple examples on the next slide, but I really like productized pricing, and there's a lot of folks out there that are kind of like leading the way on this in subscription services. Like Ron Baker, I think he just released a book on that as well. Really great stuff. The way I see this is, again, pros and cons, right? If you can do productized pricing, you're probably a bit more sophisticated than others, okay? Let's dig into this. So the advantages is higher profit margins, more passive income streams, scalable growth, monetizes the prospects not yet ready to hire you, and it drives up sales multiple when selling your firm. Talk about monetize the prospects not ready to hire you, right? So let's just say you have a call and maybe they're not ready to, bring you on as their accountant for $1,200 a month. Well, maybe there's something else you can do for them, right? Maybe there's some kind of DIY or self-serve product that they can get from you that they can try or use, and until they are ready to hire you, they can actually enjoy this service, and you can get some kind of passive revenue off of that, right? And I'll give you an example in a second. And like I said, it does drive up the sales multiple and selling your firm. I'm going to probably do another dedicated video to accounting firm valuation because I simply love the metrics involved with this. One of the biggest metrics, guys, when selling your firm is that recurring revenue, okay? And this is why, like I was showing like a little earlier, some of the members that we work with, going from a $0 to $120,000 per month, when you get to that level, your accounting firm is at a significant multiple versus the typical 0.75 or less multiples. Okay. So disadvantages. Now, this requires upfront investment to create products, right? Because you're effectively productizing your services, right? And you can have some services that you productize that still require you to do hours. So that's kind of the difference. On one hand, a productized service is like, okay, well, I'm going to say, well, I'll do this kind of like as a one and done, maybe like a IRS audit as a product, and we're going to cap it at a fee, right? So it's kind of like almost like a fixed fee thing. I'm more so talking about actually creating products on the passive side where you can actually have and sell so that when your clients are ready to come to you, at least they have already spent. And one key thing I also want you to take away, a prospect or client that has given any monetary amount to you is significantly more valuable than those who have not, okay? Even if it's like, maybe you sell your $100 QuickBooks course to them, right? These are folks that have skin in the game. They've paid money to interact with you, and they're more likely to be able to be upsold, cross-sold, or to engage you as your full-time accountant, tax advisor, or bookkeeper, Okay, so like I said, and you need to develop a product mindset, okay? And, I'll make another video on this, but it definitely has its advantages and disadvantages. So let's go ahead. So right now, it's like you typically get to this point, and honestly, if you're at this level, you're doing pretty good, and you may be at the point where you're ready to exit, right? As that next step, right? Maybe your valuation is up. Maybe you're at somewhere between a 1 and 2.0. Plus multiple, as a firm valuation, and maybe you're at a point where you're ready to get out. You want to sell it. So, but there is another step. There's another tier in this pyramid, in which I call pricing 4.0. But before I go into that, let me give you some examples of productized pricing, because I truly love productized pricing. I love personally productizing a lot of the services that I have offered. So let's go through examples. So one might be a business health check service that you charge between maybe $250 to $2,000, right? That could be in terms of like a consultative call, more so in kind of like a client report card, where you basically get some information from them and then you give them some feedback as kind of like a la carte service, right? It's not the passive kind of productized service, because you are going through some hours of your personal time to be able to do this, or even if you're outsourcing it, right? Unless you fully automate that, which is a pretty cool option. Tax planning strategy that maybe you're charging between $4,000 to $14,000, right? And this is actually something that TaxPlow completely automates, right? But you can do this yourself, and you can charge kind of like a bespoke fee to be able to create a tax plan for them. Advanced QBO course, like I mentioned earlier, maybe charging $200 to $1,200 for that kind of course. There's a lot. I haven't put out any of these courses personally. I've done pretty much everything here. I haven't put out any QBO course. There's some excellent folks out there that do that. Hector Garcia, if you haven't checked out some of his resources, truly excellent. Generative AI ChatGPT for small business guide plus course. Maybe you're charging between $50 to $500. We actually did that. We put out a nice resource using ChatGPT to grow small businesses. We really had fun putting that together. We still have that as a product that we're using. ChatGPT has changed so much over the last year. Anyway, so just some ideas of how to productize your pricing. Let's go a little higher. Let's go to pricing 4.0. Okay, this is outcome-based pricing. So outcome-based pricing, basically, let's go through it. So pick up additional firm revenue via performance, attribute savings or loss prevention directly to your services, okay? And we're going to talk about the difference in psychology between kind of like gain versus loss prevention, and these are really two powerful dynamics here. Let's talk about the advantages. So extremely high upside for profit margins, okay? This is really where you can command way above average profit margins, okay? You can still use traditional pricing for services that cannot be easily tied to your performance, okay? So listen, you can't always show an outcome, right? I mean, in a perfect world, sure, right? But sometimes maybe there aren't any tax strategies they can use, or maybe they're already doing well compared to their industry peers, right? So you can still use traditional pricing, but you have to make sure that you're doing it in a way that you can somehow tie it to performance. So if it's not an objective performance, it's a way that you can kind of tie it to that value you provide. It frees up top staff or your partners to go after higher value clients. Takes firm valuation from, like I said, about 0.75 on average to 2x plus multiples, right? So when you go to sell that firm one day or get acquired, this is something that your acquirers are heavily looking at, okay? Let's talk about disadvantages, right? Because everything is not unicorns and candy canes. So disadvantages, hard to qualify value of outcomes, okay? So sometimes, like I said, sometimes it might be hard to quantify those outcomes. It may be hard to communicate the value of outcomes. And you need to have access to a vast pool of pricing data and industry benchmark data, okay? So, basically, how do you know how much you should charge based on these particular outcomes? Well, what are these other firms charging, right? What are the national averages? And if you are doing this kind of thing, what are you really measuring against, right? What is your benchmark, right? So again, this is stuff that we've spent years, tweaking, building. It's what we've built into our TaxFile platform that does this automatically. But again, it takes some time to get it right. And then typically only the most experienced professionals have this level of sophistication. So if you're already there, if you're already doing this manually, if you're leading with outcome-based pricing, I probably don't really have too much to offer you on top of that. Are you selling your firm? Look me up. But seriously, so this is kind of like the top right now. Maybe in a few more years it may be something else, with the rise of AI that gets kind of like above this, but right now this is really one of the best things going on. Okay. So and lastly, I just want to mention, like I said, the principles of loss aversion versus gain, right? And really what you want to do is help clients avoid loss, right? Some may look in terms of gain, some may look in terms of loss, right? So let's just go through two examples, right? Let's say you offer a tax planning strategy and you say, well, this is, based off of your situation, Mr. Jones, it looks like you've been overpaying the IRS by about $50,000 a year based on the way that your previous accountant did your taxes. How do you feel about that? That is loss, right? That kind of hurts. It's like, I've been overpaying by that much, right? Or another example, right? Bringing to industry standard benchmark, right? So for example, let's just say, you're looking at Mr. Jones again and you're saying, well, hey, Mr. Jones, it looks like according, as a dental practice, you are about, at the rate you're going, you are basically overspending $1.2 million below your peers, okay? And maybe that is, and you can look at it in terms of like gross margin or net margin, depending on the situation in the particular business. But if you're saying, hey, you are actually losing this, so what you want to say is like, hey, you're 1.2 in the red right now. We want to get you at least up into your peers, where these other dental practices or other construction businesses or whatever, whatever your niche is, they are doing at this level. We want to at least get you there, and then we want to get you much above that, right? So again, that's kind of more of a loss aversion principle. But you can reciprocate that in a way that you can say that, well, hey, the $50,000, what would you do with an additional $50,000, right? Or what would you do with an additional 1.2 million, right? So that's more of, it's basically the same thing. It's basically two sides of the same coin. It really depends on who you're talking to. Most people are more influenced by what they stand to lose versus what they stand to gain, okay? So you have to really know your clients and know who you're dealing with and know how to speak to them. And the key is just listen, right? So they're, history leaves clues, right? So just be a good listener. And so this is really it. Like I said, this is a lot of stuff just kind of packed into like a quick little video. If you like this, I appreciate, if you want to learn more about this, like I said, this is what we live and breathe at TaxFile. You can go to taxfile.com. We have a little button to say get invite, because right now we're just invite only. You may not be a good fit for what we're doing, and we may not be a good fit for your particular practice, right? So you can check out the website. We kind of give you exactly what who we work for, who it's not a good fit for. So check it out, and thanks so much, and we'll see you on the next video.